Now, why do we have to have active groups like the Chamber of Commerce? Is really because this is a challenging time for our country and our economy. We are finally getting through an economic crisis that is about as deep as anything since the Great Depression. A lot of people talk about it as a financial crisis, but it really was an economic crisis. It has been a very difficult few years, but our view, and the most important thing I'm going to say tonight, is our view based on all the data and all the information we see serving 1 in 2 households in America, 1 in 3 businesses, and operating around the world. Our view is clearly that America is recovering. We are growing, this economy in the U.S., and it's growing now better than it was last year and the year before. In 2010, we would have liked to have seen faster growth, but it did grow. In 2011, we expect about 3% growth for the U.S. economy, and that's still not back to trend, as they call it, long-term trend, as our economist friends like to say, but it's growing at a rate that's pretty solid. Initial jobless claims across the country continue to fall. You've seen recently the 4-week moving average or new entrants into unemployment have fallen around 400,000. At the low point in the cycle, that will only get to, say, 250 to 300,000, so it's starting to heal. It's the lowest it's been in a couple years. The unemployment rate just surprised people by being 9.4%, down from 9.8% the last time it was announced. The number of non-farm payrolls was a little short of what people thought, was still 103,000, up from 15 and 10,000 in the months before. Here in Delaware, the employment has been a little stronger than across the country, in part because you had more recession-proof industries. Your hiring is coming along, and the predictions are for you to be at 8.4% unemployment next year, and then 8.4 in 2011 and 7.5 in 2012, which is ahead of the United States general average. As we look across the country, 5 of the 8 regional manufacturing indices that we track are continuing to grow. The 3 biggest, New York, the New York Empire, Philly Fed, and Chicago PMI, continue to move forward on a month-to-month basis. At the same time, we still have work to do in the housing market, and I'll talk a little about that later. Consumer confidence is stable. It's tepid, but consumers are getting a little more confident, and we're seeing it in our statistics, and I'll talk about that. Now, none of this slow recovery is terribly surprising when you think about how deep the recession was. From December 2007 to June 2009, we lost 7.3 million jobs in this country, and economic output declined by 4.1%. The unemployment rate reached a peak of almost 10. It is clearly and has been the longest period of recession since the Great Depression. As we contemplate that, let's look forward. In 2011, as I said, we believe the economy will grow at 3%. Around the world, we expect to see 4.5% to 5% growth, so the emerging markets driving even more growth around the world. That world growth will be centered in Asia and Latin America and certain economies of emerging countries in Russia and Europe and South Africa. But it will be more centered, whereas the core Europe and core U.S. will go slower. There are continuing signs of life in the U.S. economy. In addition to the data I mentioned earlier on jobless claim and manufacturing, we're seeing in the spending that goes on, and we see about $35 billion of monthly spending on the plastic that you carry around in your wallet. It should say Bank of America on it, despite I've got some competitors here tonight. But we've seen that spending increase from 4%, 5%, 6%, 7% over the last several months, just month after month after month on a year-to-year comparison basis, which is good. Consumer credit, you just saw, is growing again. It's the first time in many months it's done that. And frankly, that's because we're not charging off so much credit. So consumers are there to keep the credit and go forward. Factory orders continue to post gains. They rose 2.3%. They rose in November. Light vehicle sales, car sales, as we would call them, rose 2.3% to over 12.5 million units in December, which is good. They're staying above the 12 million threshold, which shows a healing auto industry. So what our client companies tell us, middle market companies, we do business about 1 in 3 in the country, they tell us that they're in good shape. They've weathered the storm well, they've stored cash, and they continue to look for opportunities ahead. In addition to our capital markets business, the M&A activity, and you saw DuPont announced a transaction today. Our transaction was approved today. You saw in North Carolina we had 2 energy companies announce a merger today. The M&A activity is picking up, mostly because people see better certainty in the future. For high-grade capital markets, the activity is the strongest in the first week of this year, had been in many, many years. Leveraged finance was very strong last year. So when you put that all together, consumers getting better and spending more, companies got through this recession very strong, Capital markets are open, so we should grow. So why aren't we going to grow as fast as we'd like? We'll grow at 3% for this size economy. That's very strong, but what's holding us back? Well, first of all, unemployment. We still have a lot of people who are looking for work, and we need to get them reemployed. So creating jobs is the number one issue that every business person and every policymaker should be focused on. Second, and part of that is that companies can grow and be effective outside the United States, even though they're United States companies, both from a demand side and manufacturing side. So that's going to put a burden ahead of us to bring back jobs in the United States and create more opportunity to grow United States employment. Third, the challenges remain in the home ownership market. We're foreclosing at about 10 times the rate we foreclosed on homes in 2005 because the borrowers simply can't pay. In 2005, there was about 100,000 foreclosures and about 1.2 million last year. This creates tremendous anxiety and a difficult societal challenge on the part of that consumer and the companies that are trying to handle that well. We've seen some good news, though. Declining delinquencies in consumer lending portfolios, including the home mortgage portfolio, is going to mean that we now have sort of sized the issue that we've got to deal with and can now work on it. The fourth thing that will hold back growth is household debt. It's still too high. It needs to go down a couple hundred percentage points back below 12%, the 12% it is now, so that we'll set up better growth in the future. And last, and this is an issue that the governor and others are dealing with around the country, is government debt continues to increase. We've gone from 40% of GDP round numbers to more than 60%. It's a serious challenge that we all need to address and address responsibly as business community members and also as policymakers, so that we ensure that the debt crisis that people keep talking about does not happen.